Global markets traded cautiously on Wednesday as investors awaited the U.S. Federal Reserve's latest interest rate decision, while renewed conflict in the Middle East and mounting questions over artificial intelligence spending kept pressure on stocks, bonds, and commodities. Wall Street was set for a muted open, with futures pointing to modest losses for the Dow Jones, S&P 500 and Nasdaq ahead of the Fed's policy announcement later in the day. Investors are increasingly questioning whether massive spending on artificial intelligence is translating into meaningful returns, particularly as competition from China intensifies. The latest concerns were triggered after South Korean chipmaker SK Hynix reported record quarterly profits that still failed to meet lofty investor expectations, sending its shares sharply lower and weighing on semiconductor stocks worldwide. Shares of major U.S. chipmakers were mixed in pre-market trading. Nvidia was little changed, Intel edged higher, while Applied Materials and SanDisk both declined. Market attention is now firmly focused on earnings from Microsoft and Meta after the closing bell, with Amazon and Apple due to report later this week. Investors will be looking for evidence that billions of dollars being invested in artificial intelligence are beginning to generate stronger revenues and profits. Despite the pressure on technology shares, the broader U.S. earnings season has remained resilient. More than 85% of S&P 500 companies reporting results so far have beaten analysts' expectations, well above the long-term average. The Federal Reserve's policy decision is expected later Wednesday, with markets assigning roughly a 40% chance of an interest rate hike. While many analysts still expect rates to remain unchanged, investors will closely watch comments from Fed Chair Kevin Warsh for signals on inflation and the future path of monetary policy. Renewed fighting in the Middle East has complicated the inflation outlook. Oil prices jumped after joint U.S. and Saudi strikes targeted Iran-backed groups in Iraq, following an attempted Iranian missile attack on U.S. forces in the region. Brent crude climbed close to $90 a barrel, raising fresh concerns that higher energy costs could keep inflation elevated and delay any future interest rate cuts. The uncertainty also supported gold prices, which edged higher as a weaker U.S. dollar offset concerns that higher interest rates would reduce demand for the precious metal. Meanwhile, Gulf stock markets came under pressure as investors reacted to the deteriorating security situation. Saudi Arabia's benchmark index fell 1.3%, its biggest decline in nearly 3 months, led by losses in major banking stocks. The sell-off followed renewed attacks by Yemen's Houthis on Saudi energy infrastructure, including the shutdown of Saudi Aramco's Jizan refinery earlier this week. Shipping data also showed a decline in crude exports through the Red Sea after the Houthis announced a blockade, although analysts say increased dark fleet activity has helped maintain overall export volumes. Elsewhere in the region, markets in Qatar, Bahrain, and Egypt also closed lower, while Dubai, Abu Dhabi, and Oman posted modest gains. Analysts say markets are likely to remain highly sensitive to developments in both the Middle East and U.S. monetary policy, with investors balancing geopolitical risks against strong corporate earnings and expectations for the global economy.